this is Tanja, and today I'm going to share information on stocks. Now, exactly what is a stock? So, a stock pretty much is a share in a publicly listed company. What it means is that you have bought into a company where you are now able to access the profits and the earnings of that particular company. How does it work? Well, basically, when companies are looking to raise capital, whether it's for expansion of their businesses or whether it's for ongoing or even if it's a startup, what they will do is that they will issue an IPO, which means that basically they come out to the public and say, we are in need of funds. This is our prospectus. This is what we're hoping to do with these funds and what we want to achieve, and we would like you to invest. Now, when you pick up those shares for the company, they then will in turn go back and they will work and do whatever they had projected that they would do in the prospectus, and from that you will earn dividends. How do you earn money from having shares? Now, you earn money in two different ways. You can earn money through dividends, where the company at some points in time, and some companies do this every year, some companies would do this every quarter, but they will issue dividends based on what their projected earnings are or what their actual earnings are. And you will be paid a percentage or some level of calculation for the share that you own. So you may see the company send out communications where they basically are saying, we're going to pay 5 cents for every share, or we're going to pay whatever they have determined, the board of directors have determined. The second way that you can actually earn from having shares is actually by reselling those shares. So when you buy into a share, you buy into a share at a particular point in time and at a particular rate. So if you bought into a share today and the price for that share was $2.50, let's say you kept that share for another 5 years, and at that particular date, the going rate is now $4 per share. The difference between the $2.50 that you paid and the $4 would be your profit. The type of investors that invest in shares. Most of the investors who invest in shares are those long-term type investors. They're persons who want to buy into the market now, and their strategy is that they will hold on to these shares for a long period of time. Sometimes they may think that there will be part of their wealth that they will pass on, or sometimes the idea is that they will hold them until their own retirement, where they will then cash out to have a nest egg for themselves. Now, one of the reasons why you would find more long-term persons investing in shares is that there's a lot of volatility that can go on with shares. Let's say, for example, 9/11 or the other C word. Now, airlines who are publicly traded, those type of shares would have taken a beating. Now, there are two types of investors. The type of investor who will panic at something like that and try to sell off theirs, and there are the type of investors who at that point in time will see that as an opportunity for them to be able to scoop up some of those shares at a lower price, because they have the faith that the price will at some point in time again accelerate. If you're the type of investor who really can't stomach the volatility in the market, then shares may not necessarily be that investment for you. Or what you may want to do is, rather than invest in an individual company per share, you may want to look at a basket of investments, which will be more along the ETF line. How do you go about buying shares? So you can buy shares directly if you have a brokerage account, or if you don't have a brokerage account, you can actually buy shares through any of the stock exchange. The stock exchange, whether in all of the countries, even in the Caribbean, they will have brokers attached to them, and you can contact a broker and basically say, I'm looking to buy shares in XY company, and they will help you through the process. If you don't know exactly the company that you want to invest in, the broker will be there to share some information with you. While the broker will not necessarily tell you exactly which one you are to invest in, they will give you some tips and they will share industry data with you to help you make the right choice. How do you know which companies to invest in? Now, if we all had a crystal ball on which companies to invest in, then there would be no need for the volatility and all of that, because we'd all be investing in the companies that we all know will work. But we don't have a crystal ball. So basically, how do you go about investing in a particular company? You start by making certain that you know the type of investor you are, what you can stomach, if you are someone who is able to ride out the volatility of the market and for what period of time. You also have to look at why you're investing in a particular commodity, whether it is shares or ETFs or bonds or whatever. And is it because you're looking for a long-term solution, whether it's to retirement, or is it that you're looking for something to supplement your income? If you're looking for something to supplement your income, you want to make certain that you're investing in something that will give you interest at regular intervals, whether that is quarterly or semi-annually or yearly. When you've decided what type of investor you are, then you also have to make the decision on the areas that you want to invest in. Do you want to invest in technology companies, pharmaceutical companies, green companies? There is a whole wide range of things that you can invest in, and that's another decision that you will have to make if you want to invest in single shares. Now, the most important part about investing is doing your research. After you've decided what type of investor you are, what areas you want to invest in, then this is where the work begins. You have to start by doing your research. So any company that's listed on any of the stock exchange, their financial data will be available to the public. So you can use that as an opportunity to go and look at the companies that you're thinking about in the particular areas that you are looking at, and you can read their financial information. You can read the reports, which basically tells you the retained earnings, how much the company have paid in dividends in the past, what type of projects the company have going forward, and you can pretty much look at their track record. Now, while you will want to look at a track record of maybe, let's say, 5 years, or we know that sometimes that data may be screwed, because if we currently look at the data for the last 5 years, considering what has gone on into the market, it may not be necessarily the best solution, or it may not necessarily give you the best information. So what you may actually want to do is look at their reports prior to the economic issues going on currently. So you may want to go back and look at maybe even a 10 or 15 year span, and all that data will be there available for you. Now, if you happen to have a brokerage account, then it's kind of a little simpler to do that, because there's a whole range of information usually on most of these platforms. They will give you their earnings per share, they'll give you the dividends that they've paid in the past, and they'll also give you a write-up of what they project to be the outlook for some companies, or the analytics of what these companies have done in the past. Now, I know this may sound all confusing, or this may sound overwhelming, and it can be if you just jump in and you say, I want to buy shares and I want to buy them and I want to buy them today, which is not necessarily how this works. You know, what I would suggest is that you spend some time, maybe a few hours here and there per week, where you go on and you read about the companies and you get familiar with the ones that you're looking at. You also get familiar with some of the terms and terminology that you may see in some of their reports or their prospectus, especially if you don't have that financial background. And once you take it piece by piece, bite by bite, you will get more familiar with the data and more comfortable. And then you will be able to make a more sound decision. One of the other things that I also want to point out is to remember that not only individuals actually invest in shares, but institutions also invest in shares. So you will have like your insurance company, governments through social insurance or through national insurance, who will also invest in companies. And especially if you live on a small island, they will definitely be investing locally and also regionally. And something that you also want to keep in mind is spreading your risk and not putting all your eggs in one basket. So for example, if you had earmarked a particular company that you want to invest in, you want to make certain that you are not heavily investing in one company, that your insurance company is also investing, or that your national insurance or your social insurance through government is also invested in. Because what it means then is that unintentionally, you may actually be heavily investing in one particular company. And pension funds, and I know this is something that not everyone is aware of, but your pension funds and your insurance funds and these type of funds, they are also investors. That's how they earn a return for you. So that's also something to just keep in mind to make certain that you're spreading your risks around and that you're not unintentionally creating a higher risk for yourselves. Now, you can also invest in shares through indices. And I know that you may hear, or index funds, and I know that you may have heard about S&P 500. Now, basically what that is that it's an index that pretty much mirrors the 500 biggest companies in the US on the US stock exchange. And they check the ratings of them, whether or not they've paid out. And every day you will see reports telling you exactly how this fund have done. So if you are not to the point where you want to invest in individual shares, but you want to invest in a basket of shares, then what you can do is look for one of those funds which actually mirrors like the S&P 500. And that would be where your ETFs would come in. And that's pretty much for the investor who's saying, I want to invest in shares. I don't necessarily have all the confidence that I can go out and invest in individual shares, or I am not there yet. Or it could be simply a way of how you set up your portfolio. Because as an investor, you also have to make certain that you have decided before you have embarked on the investing journey of how you're going to set up your portfolio. And I'll probably share a little bit of that in another video. But basically what I'm saying is that you have options in terms of investing, and even investing on the stock market. You can do bonds, you can do shares, individual shares, you can do ETFs. And you will want to decide exactly how you are going to plan how much you're going to invest. So let's say you're going to invest $100. How much of that do you want to do in individual shares? How much of that do you want to do in ETFs? And how much of that do you want to do in bonds? And the reason you'd want to do that is to try to create a more balanced portfolio for yourself. So investing for shares is something that you can do with small amounts of monies. You can start by buying a few shares here and there in particular companies. You know, when you've done your research, and then you can branch off as you will become a more confident investor. There is nothing that says that in order to be an investor, you have to invest in each and every option, but it's just one of the choices out there. So tell me, do you have shares currently, and how did you go about investing in them?